This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on October the 9th, 2014, a Thursday, and we will be reverting back to taping on Friday now that Harold has gone back to living in Florida, lives part of the year in Colorado as a Canadian, now back as a Canadian in Florida. Connect with our radio show and we have different ways you can listen. Go to HESradio.com, also rarecoloreddiamonds.com. We have the shows streaming there. We have a podcast through iTunes. Type in the World Financial Report on Radio. You'll find our podcast. We go anywhere you do. Our show is portable on your portable device. You can subscribe to it. It comes in every week. We have a very important companion to the radio show. It's our free weekly newsletter. If you're not getting the World Financial Report on Radio newsletter from Harold Siegel, you're not getting the information you should on a weekly basis to stay informed. That's why we say get your name on our list for the free weekly newsletter, World Financial Report on Radio newsletter. You can do it by connecting with Harold at rarecoloreddiamonds.com or 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. Later in the show, we'll talk about diamonds. Great week for diamonds. A pink diamond sold at auction for $17.8 million. Blue diamond sold for $5.3 million, and there was a blue and pink diamond that sold for $2.5 million. Also, the metals, a little volatile last Friday. We saw some volatility in the market due to the jobs numbers in the United States. But if you take a look at the labor participation rate, it's at a 36-year low. In fact, there's a record, if you can believe this, almost 56 million women not participating in the labor force. No wonder why the unemployment rate is going down. You have so many people not in the labor force. Then, as the week went along, we got the Fed minutes. And the Fed minutes, they were very concerned about what's happening with the strength of the U.S. dollar, also the weakness of the economies around the world, and how they believe they're going to have to continue to be very dovish on interest rates for a long, long time. And then, of course, geopolitically, we continue to have problems in the world. And Ebola, we had our first death in North America in Dallas with an Ebola patient. And Harold, as we get into today's show, we say happy Thanksgiving long weekend to you. I know Thanksgiving is your favorite time of the year.
You better believe it. And being Canadian but living in the United States, I get to have it twice. So I am looking forward to that. We both actually have a long weekend. The markets are going to be thinly traded going into Friday because you've got Columbus Day in the United States, so the markets are closed on Monday. And in Canada, we have Thanksgiving. So the markets, it's going to be a nice long weekend for everybody. I'm off to Chicago, actually, next week with Susan G. Komen, the breast cancer charity. They have a huge event where in Chicago at the Wrigley Mansion, they're having a beautiful fundraiser, but they're actually lighting two of the bridges in Chicago pink for Komen charity. October is breast cancer month, and we've got a huge affair coming up in Chicago where we are taking over for De Beers, actually, and we'll actually be showing our diamonds to 150 of the wealthiest socialites in Chicago. So we're very excited about that, and we hope to raise an awful lot of money for a very worthwhile charity. So that's exciting. We're leaving on Tuesday and coming back on Thursday, but, you know, we will be in touch and keeping in touch with all of our clients. All in all, the markets have been volatile this week. The stock market, as we're taping the show here on Thursday, the Dow is down another 126 points. So we're starting to see a lot of volatility in the Dow. We've been talking a lot about, you know, the fact that the Dow does not reflect what's happening in the U.S. economy, and it should be. That's what a stock market is supposed to do. It's supposed to reflect how well a country's economy is doing. We know that the U.S. economy is not doing great, but the stock market was over 17,000. It was a head-scratcher. Why in the world would the Dow be rallying when so many people are out of the workforce? You know, the funny thing is, Randy, is that they come out with the job numbers last week, and they brought the unemployment numbers down to 5.9%, which sends out a wrong message. Because the fact is that, as you brought up at the beginning of the show, a lot of people are not in the workforce. More women at this point than men. So basically, they said they added 280 some odd thousand jobs last month, but according to this report, over almost 300,000 women dropped out of the workforce. So doesn't that balance things out? I just don't understand it. But they play with the numbers and they make it look better than it is. But believe me, I'm a Canadian living in the United States for the last 30 some odd years, and I know what's going on. I've traded these markets for 35 years, and there's just no way in the world that that market is going to sustain those type of rallies. So we're down to 16,877. We're down 116 points at the opening. On the other hand, gold is up 650. You know, we saw gold getting right down to that support level of 1180. 1180 is a very heavy support level for gold, means it's going to be difficult for the market to break below 1180 in gold. 1180, why is that price important? Because in 2011, when the Dow hit $1,920, which was the high that market hit, and then all of a sudden, one day out of nowhere, they decided to drop down the gold market. They raised the margin requirements 5 days in a row. They made it so expensive to trade gold, and gold went from $1,920 an ounce all the way down to 1180, and that's why I'm saying that 1180 is now the support level for gold. Now, we almost broke it last week. Gold got down to 1187. We're back up to 1229. We're up 650 today. Does that mean that gold is now moving back into a bull market? I don't think so. I think at this point here, until they stop rallying this dollar, and the reason that the dollar is rallying, the U.S. dollar, is because the foreign currency markets are falling, mostly in Europe. The German markets are falling. Germany is in huge trouble. We're going to talk about that in a couple minutes. But all in all, the euro has dropped from 139 down to 127, and that's why the U.S. dollar is sitting right now at about 186. I'm sorry, at about 86 cents. Now, don't think that 86 cents is a great price for the U.S. dollar. It isn't. And by the U.S. dollar rallying at this point, it brings inherent problems, because the fact is it's going to affect anything that the United States exports is going to be in trouble now because their dollar is so strong. And again, it's not that speculators are saying things are so great in the U.S., let's buy the U.S. dollar. It's that they're shorting the European currencies because they're in a recession. We know that Italy's in a recession. France is about to go into a recession, but the biggest of all, and the biggest economy in all of Europe, is really Germany, and they've got serious problems. So as that continues to unwind, it's going to affect the currency markets, and it's going to affect the U.S. dollar, and it's going to affect gold. So at this particular point, what do I think is going to happen in gold? I think we're going to retest the 1180 level. As long as the U.S. dollar, continues to strengthen, there's a direct correlation between gold and the U.S. dollar. As the U.S. dollar weakens, gold goes higher. As the U.S. dollar strengthens, gold goes lower. So unless we feel that the rally in the U.S. dollar is over, which we don't, because unfortunately at this point, again, things in Europe are getting worse and worse. So as the foreign currency markets continue to fall, it's going to push down the price of gold as the U.S. dollar continues to strengthen. Now, I don't think that this is a very long-term situation in any way, shape, or form. I highly doubt that we're going to see these currency markets continue to react the way that they're going. If gold was to break 1180, and I don't want to scare anybody, but you do have to have the information, it is possible that gold could go to $1,000. If the U.S. dollar continues to strengthen and gets up to around the 90-cent level, then we're going to find that gold should break the 1180 level and could realistically drop down to 1,000. So basically, we think that, we're going to hold off on buying any gold at this particular point, or silver, until we see a reason to buy it. And once the U.S. dollar starts to fall again, which it has to do, believe me, there is going to be a time in the foreseeable near future that the U.S. dollar is going to fall and fall heavily. It's the stronger currency of all the weak currencies. So basically at this particular point, again, 1180 is very heavy support for gold, and if it broke 1180, there's no doubt in my mind that gold could could fall substantially and take one big drop down to $1,000. Silver, on the other hand, is back up to 1776. There's heavy support in silver at 1650. Silver's actually come back about $1 and change over the past week, and gold has actually come back about $35. So it is possible that silver could test the 1650 level, and if gold was to drop to 1,000, silver could literally drop to about $14.80 to $15. So again, if you're one of the ones that have gone out and leveraged positions in the market, that's something that I've always been against. We've always said to buy physical gold and silver, not to leverage, in the futures markets or anything that you're purchasing. So the fact is that this market is going to get volatile. I think the gold is actually going to go to $4,000 to $5,000 eventually, because all the problems that are inherent in the market are still there. And inflation has to come. There is no doubt about that inflation is going to be one of the major factors that we're going to have to deal with. But before we deal with inflation, and we are starting to see inflation hit certain areas of the world. For example, Russia has now got 8% inflation. I think a lot of that has to do, or part of that has to do with the sanctions against Russia, and that's also affecting the oil market. It's making the oil market drop, basically. On top of that, you've got Venezuela. Now, we had an article, Randy, remind me, on Venezuela. Were they saying that the inflation rate was into the double digits?
That's right. It's very, very high. You're looking at anywhere 50 to 60%. It's super, super high right now.
Well, we saw the results of that. We looked at the articles and what things were costing, just everyday things were costing in Venezuela, and you just would not believe it. So the fact is that a lot of people do not remember inflation. A lot of people don't remember going back into the late 70s, early 80s, when inflation was in the double digits in North America, and the way they fought inflation was to raise interest rates. Interest rates actually went to 22% before they could get inflation under control. So the fact is that food prices are still extremely high, and with people not working, the fact is that inflation is going to be here. Inflation is here right now. They just don't show up in the numbers, and that's an obvious situation. But the fact is that inflation is killing Venezuela, and now it's going to start to do the same thing in Russia. We've seen throughout certain parts of Central America and South America, when inflation does hit those areas, it's extreme. So all in all, the markets are a mess. There's no doubt about that. You've got the oil market down fairly substantially, and it really shouldn't be, because the fact is that with these sanctions going on and what's happening in the Middle East and everything along that line, it is affecting oil over the shorter term, but we do believe that oil is going to go back up. We're very bullish on oil. We're long-term bullish, short-term bearish on gold and silver. And the fact is that don't let this rally fool you, because the fact is there still is weakness in the metals, and it's primarily because of the currency markets. So all in all, we are going to have to fight this out. We are going to be able to bring to you within the very near future, at the right time, when it's the right time to buy gold and silver, we're going to be able to bring to you gold and silver physically, that you're going to be able to buy, bring home with you. There's not going to be any commissions. There's not going to be any spreads. There's not going to be any storage. There's not going to be any interest. There's not going to be any of that. All we want is at the right time for the listeners to our show and our clients to be able to start to make their money back in the metals. And the way that we're going to do that is we are going to work out a deal, and we have pretty well, with some very substantial mines in South Africa. It's just a matter of finalizing the deal and starting to bring it back into the country. There's import duties and things like that. But you know yourself, when you go to buy gold from a dealer, you're going to pay substantially over the spot price. We're going to bring it to you at spot price. So when it's ready to do so, and when the market is ready to buy again, I'm certainly going to let you know, and we're going to bring this physical gold and silver to you so you can buy it at the right time with no commissions and make money. Basically what it means is that if gold does go to 1,000 and you buy gold from us at 1,000, at $1,001 you're in profits. In fact, at 1,001 cents you're in profits, because we're not going to charge you any commissions. All we want is for the listeners to our show to get back to financial health, and we're going to help you do that. So all in all, again, gold's up 650 today. It's at 1229. But the fact is that we should see another test of the 1180 level and the 1650 level in silver. Now, again, I would love to see the market hold at that level, but again, I just don't. I just don't see it. I think that with the strength of the U.S. dollar and what's happening in Europe, that's going to be an issue. Now, the U.S. government doesn't want a strong dollar, just like the Canadian government doesn't want a strong dollar. And look what happened to the Canadian dollar. It's 12% below the U.S. dollar. The U.S. is going to have to do that soon, otherwise it's going to cripple their exports, and that's going to hurt their economy. But what's really going to hurt the U.S. economy is the recession in Europe, with Italy, soon to be France, and Germany. And Germany, as I mentioned before, is the biggest economy in all of Europe, and they're really hurting at this particular point. So we are going to see that business in Europe is going to affect business in the United States and Canada, and it is going to affect the markets in a substantial way, and that's coming very soon. In fact, one of the reasons that the Dow, I believe, has dropped so much this week is primarily because of that very reason. So at this point, we're just going to sit back. We're going to monitor and see what happens with the gold and silver markets. If it was to hold and there was a reason to buy it, if it comes back to 1180, and that's where most people will buy gold. Most people that can read a chart and understand what's happening are going to buy it at 1180. We're going to want to see that 1180 level holds, and if it doesn't, I know that this sell order is below that. And again, for those of us that are just going to go out and start to buy gold again, I don't mind waiting for it to get to 1180 or even $1,000 because, again, we want the opportunity to catch it as close to the bottom as possible and make back our money. So all in all, that's what's happening in the markets at this particular point. There's a lot happening around the world. The TSX has dropped off substantially. It's down 111 points this morning at 14,555. Don't let this news on gold and silver concern you. We don't trade gold and silver. That we've always said that you want to hold it as protection, as insurance, as a hedge against inflation and currency devaluations, and that is definitely going to happen. All that has happened at this particular point is that as of 2008, the U.S. government and the Federal Reserve has done everything that they possibly can to try to get the economy back on track. But speculators, people that trade the markets like stocks and commodities and things like that, they oftentimes misread their timing in the market. And because it's literally impossible to pick the absolute top or bottom of any market, the reason that we don't trade gold and silver is primarily because it's not a trading mechanism. It's the type of asset that you buy against bad things happening. And again, there's no doubt that all of that is present in the market. So I'm holding my gold and silver, but I'm looking for an opportunity to pick up some very inexpensive gold and silver, and I think that's going to happen within the next couple months. And obviously, we'll keep you advised as to what's going on. This is not a terribly negative situation, because what's coming forward is negative. The fact is that the U.S. going into a recession again because of Europe is a very difficult situation, and it is going to affect the markets. So we're going to sit back and wait for our opportunity, and when that opportunity is here, we're going to pounce on it in a big way. In the meantime, the second half of the show as to what's happening in the other part of the alternative asset market, which is diamonds, is just absolutely staggering. I mean, the news that came out of the diamond market this week was absolutely phenomenal, and when you think that the whole world is in disarray type of thing, when you hear on the second half of the show what happened in the diamond market, you're going to be blown away. So again, Randy, this is basically what's happening. Europe's in a recession. The United States is going to have to deal with that because we deal so much with Europe, and the currency markets and the stock and commodity markets will continue to be affected, but we're on top of it, and we are going to turn this thing around, and we're going to end up making an awful lot of money in the alternative asset market.
The most secure and profitable investment, millions of years in the making, rare-colored diamonds. See some of the world's finest investment diamonds at rarecoloreddiamonds.com. It's like a museum online with the world's greatest investment diamonds available to you. Diamonds are nature's art, private, portable, stable wealth. Speak with Harold today about starting your own diamond investment portfolio or receive a free copy of the weekly World Financial Report on Radio newsletter by going to rarecoloreddiamonds.com. That's rarecoloreddiamonds.com, or call 1-800-432-1022. That's 1-800-432-1022. In our newsletter this week, as we touched on last Friday, there was a jobs number that came out that a lot of people were excited about. But if you dig deeper, you find out the labor participation rate dropped to a 36-year low. A record 92.6 million Americans are not in the labor force. Well, by now, everyone should know the answer. For those curious why the U.S. unemployment rate just slid once more to 5.9%, the lowest point since the summer of 2008, the answer is the same, one that we have shown every month since 2010. The collapse of the labor force participation rate. And you can read about that in our free weekly newsletter. Also, a record close to 56 million women not participating in the labor force. And that's a staggering number. They're saying that 56.7% of women are actually out of the labor force. Also, one of the reasons we invest in hard assets, maintaining your purchasing power, having that asset maintain its value. In Russia, they're being hit with the highest inflation in 3 years. In fact, it's at 8%. And for a reminder, we have in our free weekly newsletter this week, check out the cost of living in 1938. To give you an idea, a new house was $3,900. The average income was $1,731 per year. A new car was $860. So this is what we're trying to protect against, and that is your assets being depreciated as a result of inflation. We want assets that profit and protect against inflation. Those are diamonds and hard assets. And Harold touched on it. In Venezuela, the inflation rate is 63%. And just to give you an idea of what it costs for carrots, just for a small bag of carrots, $20. If you want to buy some Nike shoes, you're looking at approximately $1,200. For a bag of dog chow for your dog, it's $270. And if you want a TV, you're looking at about $5,500. It's an absolutely staggering number for those people that are living in Venezuela. 60% inflation, a major, major number. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022. When we come back and talk about diamonds, as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on October the 9th, 2014. Thanksgiving long weekend. Our radio show is running on 630 CHED. The show can also be picked up via the web, archived. We have the shows streaming live at HESradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes. Type in World Financial Report on Radio, the World Financial Report on Radio. You'll find the podcast. We're portable. We go anywhere on your portable device. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. His telephone number to speak with him personally and privately, 1-800-432-1022, 1-800-432-1022. The website, rarecoloreddiamonds.com. As Harold was saying, it was a great week for diamonds, and we'll explain here momentarily. Our featured diamond of the week is a .88 carat emerald cut, fancy, vivid, purple pink argyle. It is absolutely amazing. It is a museum piece. You can see it at rarecoloreddiamonds.com, rarecoloreddiamonds.com. Featured diamond of the week. We have a picture of it in our newsletter. This week's diamond, .88 carat, emerald cut, fancy, vivid, purplish pink argyle. Absolutely stunning. Sotheby's, as promised, we had talked about this for a couple of weeks, held their magnificent jewels and jadeite sale. October the 7th, 2014 in Hong Kong. And we do have the auction results for you in the newsletter. Three of the big ones. Lot 1941, a superb and highly important fancy, vivid purple pink diamond and diamond ring mounted by Sotheby's. Centering on a pear-shaped fancy, vivid purple pink diamond weighing 8.41 carats, the estimate on it was 12.8 to 15.4 million. It went for 17.7 or $8 million. 17.7 or $8 million if you wanted to round it off. An outstanding result. Also, lot 1936, a fancy, vivid blue diamond and diamond ring, and centering on an emerald-cut fancy, vivid blue diamond weighing 3.32 carats, flanked by 2 trillion-cut diamonds, together weighing approximately 2 carats. The estimate on it, they had an estimate of about 3.3 to 4.3 million. It ended up going for 5.3 million US dollars. Also, lot 1775, a fancy blue diamond and pink diamond ring, and this was beautiful, just a stunning item. Centering on a heart-shaped fancy blue diamond weighing 7.02 carats, flanked by marquise and pear-shaped blue diamonds to a stylized mount set with brilliant and circular cut pink diamonds, the blue and pink diamonds together weighing approximately 3.60 carats. Now the estimate on it, 1.5 to 1.9 million. It sold for $2.5 million. And Harold, with all that's going on in the world today, with geopolitical problems, health scares, Ebola, and then, of course, you have the economies of the world not in great shape, and yet diamonds. Here we have an auction that, once again, they exceeded the prices. They did better than expected, and that's why we're investing in diamonds today in the environment that we're living in.
Beautifully put, Randy. That was a fabulous auction. And our featured diamond this week is an 88-point fancy, vivid, purplish pink argyle. So now you're seeing that vivid pink that just sold at auction sold for world record over $2 million a carat. Do you realize that 10 years ago that same diamond probably would have sold for $200,000 a carat? Now, this is what we've been saying for the last 8 to 10 years to our clients. These are the type of diamonds you want to invest in. Obviously, most people cannot afford a $17 million diamond. But diamonds that are $50,000, $100,000, $200,000 today, in 10 years from now, when the mine is closed and there's no more diamonds around, you're talking about diamonds that are going to go up 800 to 1,000%. It's the same percentage. All that is important is how much you can afford to invest in an asset like this. Now, the beautiful thing about owning an asset like the featured diamond this week, which is an 88-point emerald cut, which is one of the rarest cuts in the world. It's a fancy, vivid, purplish pink argyle. A diamond like that in 10 years from now will be a 7-figure diamond. So basically, you're talking about an asset that is so rare that it will never, ever fall in price because there's so few of them. And in 6 years, when the argyle mine closes, there won't be any more of them. And then you can imagine what the price of these diamonds are going to be. It's an unbelievable situation. And I'm very, very pleased that this is something that we did a lot of research into, did a lot of studies, spoke to all the experts in the business, and then I sat down for 2 years before I actually brought this to our clients' attention and brought it up on the radio show. So I was 100% convinced and positive of what's happening in that marketplace. And we've seen that in the rare colored diamond market over the last 7 or 8 years that we've been bringing it forward to our clients, that these auctions have proven that this is one of the best investments you could possibly make. They never decline in value because there's so few of them. And in the case of argyle pinks, as we get closer to the mine closing down, which is only 6 years from now, you're talking that the price of these diamonds are going up more than any other commodity out there. And because there's so few, there's only 200 carats a year that come out of that mine. You're talking such a small amount of diamonds, and that represents 95% of all the pink diamonds in the world. So here you've got a situation where this diamond that we're showing as a featured diamond is almost a carat. The diamond that sold at auction this week was just over 7 carats, and that sold for $17 million. So you can imagine that with no more diamonds coming out of the Argyle mine in 6 years, how much these diamonds are going to increase in value. And that's where we've invested most of our money, so our clients have the opportunity to invest in this type of asset. You look at the stock market as an example, and you see every day the market's either up or down. You look at the gold market and the oil markets and the commodity markets, and a similar situation because they trade on an exchange, and basically you've got buyers and sellers that are pitted against each other on a daily basis, and some are bullish and some are bearish, and that's what makes the market. That's not happening in the diamond market. This is an alternative asset market for people that don't want to necessarily be in risky stocks and commodities and that type of thing. An asset is portable private wealth, an asset that you could put away in your safety deposit box and nobody even knows that it's there. When it's time to sell it, you're talking about an asset that could take care of your retirement for you. You know, the fact is that many of my clients have had money in their RRSPs, you know, for the last decade. And because of the tremendous volatility in the stock markets, barely breaking even, some are in profits, but that's after 10 years. If you were to put your money into this 88-point emerald cut fancy vivid purplish pink, in 10 years, that diamond will outpace any other investment that you could possibly have. And again, you're talking about something that is so ridiculously rare that there's very, very few of these that even exist in the marketplace today. Just like that 7.5 carat that sold for $17.5 million, that was bought many, many years ago. Believe me, the profit on that diamond is astronomical. Just like the same situation will happen with these Argyle pinks. Now, you want to invest in Argyle pink diamonds and either put it into a magnificent ring or piece of jewelry, which we could do for you, or just put it away simply in your safety deposit box. One of the reasons why diamonds have never been in the forefront as a strong secondary market is primarily because there was never a market to resell them. My background is in marketing and in trading. I've traded for 35 years in the commodities markets, and I like to think that I'm fairly strong in marketing. And basically, when I look at the diamond market, I'm looking at a market that is so small, but it never had a way to resell them. And that's the biggest contribution that we've made to the diamond business is our auction business. Again, it's a live virtual auction that we sell diamonds and high-end collectibles to clients all over the world. And when we hold an auction, it isn't only in Canada or in the United States, it's all over the world. And you can actually attend this auction from the comfort of your own home by sitting on your computer and being part of the auction. Either you can bid and have a lot of fun and own something, or you can watch it for the first few times just to get a comfort feeling. But this is something that we're very proud of, and obviously the marketplace has really loved what we built because we've been on Bloomberg 4 times and Fox News recently, all because of our auction business. Now, the fact is that most people that buy diamonds, you don't buy a diamond or invest in a diamond and look to sell it in 2, 3, 4, 5 years. It's just not going to make you enough money. It's a long-term, safe investment that you put away for your retirement. Don't look to sell a diamond that you've owned for a couple of years. You're just not going to make any money on it. A diamond goes up by 10, 15, 20, 25% a year, depending on the color and the saturation of color. And again, depending on how strong it is. But basically, you want to put this away for your future. I brought this up many times, but a diamond, a pink diamond that my wife's girlfriend inherited from her grandmother bought it 50 years ago for $50,000. Today, that diamond's worth $4 to $5 million. That's the type of returns you get by holding long-term onto a diamond, a painting, a Van Gogh, a Monet, a Renoir. Those go up tremendously. And fortunately, I've been able, through some amazing contacts that I made in the diamond business and collectors of mine and whatever, I'm showing some art pieces that are in the $100 million range. I was offered an Andy Warhol painting. 3 of them are sitting in museums and one's in a private collection. And because of diamond business that we've done with clients in Europe and all over the world, now these type of treasures are coming to us and to our clients. And it's unbelievable the amount of money that's going into the alternative asset market, meaning diamonds, rare arts, the type of people and artists that I just mentioned to you, and antique and classic cars. Those are where big money is going, and a lot of the big money is coming out of the stock market at this point because wealthy people are not stupid, and they know what's happening in the markets at this point. They know that this rally in the Dow is almost over, and when it falls like it did in 2008 or 1999, it can wipe you out. You wait another 5 or 6 years just to get back to break even. If you've got profits in the stock market and you're getting worried about what's happening, and you see the same thing that we do, not a strong economy, but a market that is reacting to other situations that it shouldn't be, take some of that money off the table and put it into an asset that's going to make you an awful lot of money over the longer term. So the fact is that we're building our auction business. The fact is that we're going into our third year of auctions. We're starting to build up our clientele, people that can afford to buy higher priced diamonds. Don't forget, we're dealing with the top 1%, people that earn enough money to be able to afford an asset like this. 75% of the people in the United States don't have $10,000 to their name. 75% of the people in the United States don't have $10,000 to their name. My diamonds start at $20,000, so you can understand that eliminates over 75% of the population of the United States. However, my business is growing because of our charities and the charities that we work with. The Susan G. Komen charity that we're going to be in Chicago for next week is a charity that we donate a lot of money to by using our auction. But the beautiful thing about it is that it works both ways. We give a lot of money to charity, and we use our auction business to promote the charities and to raise money for them. But on the other hand, the wealthy donators are now my clients and people that attend our auctions. So that's another reason why we're involved in that aspect, so we get to know higher net worth individuals that can afford to buy our diamonds, and that's a process. It takes time to do. On March the 19th, we're doing a very large auction for one of the biggest charities in the world, which is the Girl Scouts of America, and they approached us. One of the wealthiest women in all of North America, who owns the Inquirer actually, contacted my company to do a very large auction, and they're inviting all their own people. This is what's happening in the diamond business. This is what's happening and how we're building our business. So please be patient with us. If you run into financial difficulties and you own a diamond, don't look to sell that diamond because it's your future. It's something that's going to make you an awful lot of money down the road. But if you own it for a year or 2 years or 3 years, you're just not going to get enough out of it in order for it to be worth your while. This is an investment that is better than owning any type of retirement savings plan. I put away diamonds for my children and grandchildren and for my future, as have most of my clients. And we suggest that you do the same thing. Go to our website. And oh, by the way, within the next week, you are going to be able to go, 2 weeks actually, you're going to be able to go to rarecoloreddiamonds.com. Randy, I didn't get a chance to mention this to you now, but we've been working on this for a long time. You're going to be able to go to our website, rarecoloreddiamonds.com. You're going to be able to look at our yellow and our pink and our green and our blue diamonds. You're going to click onto a diamond, and not only do our diamonds rotate because they're videoed, but now it's going to have a voice description. I'm going to be able to describe everything to you about that particular diamond that you need to know. I don't really like to work off of emails and that type of thing. I like to talk to people in person, and people like to hear what's going on. So we have a new feature that will show up on our website within the next 2 weeks, and you're literally going to be able to click onto a diamond and learn the whole history of that diamond. I'm so excited about this. I'm going to be able to send emails to clients that are audio. You're going to be able to see our diamonds. We're going to email diamonds to you that are within your price range, comfort level, and you're going to be able to hear my voice telling you everything about that diamond, the whole history about it. We're very, very excited about the new things that we're working on, our new charity situations. Again, we were approached by Girl Scouts of America and the Heart Foundation. We have put away probably 400 heart diamonds that I've collected over the years that we put away, and we're going to do a huge promotion and fundraiser for the Heart Foundation. So this is what's happening with my company. We're a very progressive company, and even though the markets are down in gold and silver, the fact is that doesn't happen in diamonds. You may be down temporarily, and the only way that you lose is when you sell. The fact is that we're not selling our gold and silver right now. We're getting ready to buy it. We're getting ready to buy gold at 1,000 to 1,180 in that area, and we're getting ready to buy silver, anywhere from 1,450 to 1,650. And I'll let you know exactly when we feel that time is, and we're going to bring you the physical metal where you can buy it directly from us, get it delivered directly to your home, and we're not going to charge you a commission. And the reason for that is because we know that with the drop in gold and silver, that some of our clients have leveraged it, and we've warned you against it, but there's a very good chance of making our money back in the metals, and especially in diamonds, which don't react like the commodity or stock markets. So, again, I think that everything is going to be fine in the commodities markets because, again, what's happening is manipulation in the market, and that's only a short-term situation. The markets will always react the way they're supposed to once the manipulation is over. The biggest money is going to be made in diamonds, though. This Argyle pink diamond that we're featuring this week is one of the strongest diamonds, but we've got Argyle pinks starting in the 30 to 40,000 range and going up into the seven figures. Most of our clients that invest in diamonds invest normally under $250,000, but many of our clients in the 20 to 50 to 100,000 range, and you can do very, very well. Yellow flawless diamonds increase by about 15% a year. Meaning, a diamond you can buy today for $20,000 in 10 years from now can be $70,000 or $80,000. That's what we're talking about, the diamond market. And again, Randy, by the auction results, it's obvious that what we're saying is 100% so because the estimates, which are put together through experts in the industry, in the auction industry, and all of those estimates were exceeded substantially.
Well, and the truth of the matter is that when that auction happened, all the excuses in the world were there for not a good auction and poor results, because you have Europe in chaos financially when it comes to their economies. You have Ebola. You have geopolitical trouble around the world. It's just not a very good time when it comes to what's happening stability-wise in general for the world, financially and geopolitically. And yet, the diamonds came out as the shining stars of this auction. It tells you everything you need to know. The most secure and profitable investment, millions of years in the making, rare colored diamonds. See some of the world's finest investment diamonds at rarecoloreddiamonds.com. It's like a museum online, and you can go there and take a look around. Diamonds are nature's art. Private, portable, stable wealth. Speak with Harold today about starting your own diamond investment portfolio. Receive a free copy of our weekly World Financial Report on Radio newsletter. You can go to rarecoloreddiamonds.com and connect with Harold, rarecoloreddiamonds.com, or call 1-800-432-1022. That's 1-800-432-1022. Our featured diamond this week is a .88 carat emerald cut, fancy, vivid, purplish pink Argyle. It is stunning, the cut, and the color is so vibrant. We have auction results we'll send you from the auction Sotheby's Magnificent Jewels and Jadeite Sale, October the 7th, 2014 in Hong Kong, China. And the star of the show was Lot 1941, a superb and highly important fancy, vivid, purple-pink diamond and diamond ring. It sold for $17.8 million, and Harold brought up a very important point, and that is a record. It sold for $2.1 million per carat. That is a new record for pink diamonds at auction. So we have yet another record in pink diamonds. It's just an exciting time to be involved in hard assets like diamonds, and you can learn more by dealing with Harold Siegel, the worldwide leader in rare colored diamonds. Connect with him at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or give him a call and speak with him personally and privately at 1-800-432-1022. And Harold, it's just a time now for people to sit back and take a look at where we go in the future. What will the markets be doing in the future? What assets will we be able to go into today to take advantage of where we see things down the road financially and geopolitically? and we still are very, very strong believers, and even more so than ever after the auction results, you need an allocation of diamonds as an insurance policy in your portfolio.
You bet, Randy. You know, the fact is that I'm in the business, so I see it every day, but I'm astounded by what's happening in this particular marketplace, and it's got to get stronger and stronger. And, you know, the wealthy are not dumb. They know what the risk is in the market, and basically a lot of the smart money is coming out of the market at this point. In fact, it's been out for quite a while now. So the fact is that we continue to deal in what we believe in. And the fact is that in 35 years that I've traded the markets and been involved in the financial industry, again, these are very, very concerning times. You've got recession in Europe. You've got geopolitical problems. You've got this Ebola virus that some people are saying is going to be one of the worst situations we could ever imagine. On top of that, you know, you got all this volatility in the marketplace and everything along that line. All I'm saying is be smart and diversify. Take some of the money that's at risk and put it to work in a very safe asset that you can put away over time. You put it away and forget about it for the next 10, 15, 20 years. The fact is that if you don't need the money and you don't need to sell it for your retirement or to live, pass it down to your kids. That's where the huge money is made. Like I say, 50 years ago, you could have bought a 5-carat pink for $50,000. Today, that diamond, if you could ever possibly find one, is $4 to $5 million. How could you ask for a better return? Because if you look at taking that same $50,000 50 years ago and putting it into the Dow, I haven't done the numbers, but the chances are is that you would have hardly made any money on it at all. Because don't forget, in 2008, the Dow dropped from 14,000 all the way back down to 6,500, and it took all those years just to come back up. So again, this is an asset that is extremely important. This is an asset that over time can make you an awful lot of money and save you an awful lot of wealth. And for those that are concerned, the conspiracy theorists and all that feel, you know, that at time that the government can go in and confiscate different things, like they've confiscated gold back in the Roosevelt days type of thing, and the U.S. government has done similar things recently, as inquiring into where people own their metals. That doesn't happen in diamonds. Nobody even knows that you own it. It's portable private wealth. You could walk around with $1 million diamond in your pocket and nobody would even have a clue. However, you cannot walk around with a lot of cash or stocks or anything like that. So I'm very bullish on this market. I've never been more proud of a recommendation that I've made, and I've made many recommendations in my life. Some have turned out to be phenomenal. Gold from $250 to $1,900, silver from $4 all the way up to $50. But I think the best thing that we're doing is in these rare diamonds, and I just think it's going to make our clients a fortune over time. It's not a short-term situation. If you buy a diamond today, you want to hold on to it for 10, 15 years. That's where you're going to make your big money. And I'm very, very excited. These auction results, Randy, were just absolutely blowing me away because, again, we've been saying to our clients, buy the vivid pink diamonds, buy the intense, because now the vivids are going to get so expensive. The next color down are intense and fancy pink, and again, they're less expensive. That's where you want to put your money, because as the vivids get really expensive, the next ones to go are the colors right under that. So again, they're getting harder and harder to get. The mine is going to close in less than 6 years. You want to get into this market as quickly as you can, because the results are going to be tremendous on these pink diamonds from Argyle.
Harold, I wish you and your family a very happy Thanksgiving. Enjoy the day.
Thank you very much, my friend, and I wish everybody a wonderful long weekend, a very happy Thanksgiving, and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. Learn more about investing in diamonds, hard assets. 1-800-432-1022, 1-800-432-1022. You can connect with him via the web and take a look at some of the world's greatest museum piece diamonds online at rarecoloreddiamonds.com. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.